and we've set up our research team to follow technologies, not sectors, because we think that's the way the world's going to evolve. The lines between and among sectors are going to blur because of technology. So we think the opportunities are immense, and we want to provide a differentiated exposure to innovation.
In a recent interview with eToro, Cathie Wood discusses Bitcoin's impact on the future of finance, the transformative potential of artificial intelligence, and the disruptive innovations reshaping the global economy. At the time of the interview, Bitcoin is trading at approximately $67,000, showing a 2% rise in the last 24 hours and a 7% increase over the past month. Cathie highlights how these groundbreaking technologies are not just advancing but fundamentally transforming the financial landscape. Before diving into the discussion, don't forget to like, subscribe, and share this channel. Now, let's hear from Cathie Wood.
Well, I've been in the business for a very long time. I actually started in New York City in the early 80s. So I saw the market evolve from completely active, meaning no passive strategies back then, to the tech and telecom bubble. And then we went into a 20-year period, first with the tech and telecom bust, and then the 08-09 meltdown, where there was a big shift towards passive. So why did I start ARC in 2014, 10 years ago? I started it to really go back to the future, because I think now that the market has become so concentrated into so few stocks, that we're going to see a broadening out of the market as interest rates come down. Now, 10 years ago, I would have said the same thing. We saw concentration, but in the last 6 months, it has reached an extreme that we have never seen before. And so it's unlikely to continue to concentrate into just a few stocks. And the broadening out process should be great for our strategy, which is the closest you'll find to a venture capital firm in the public equity markets. We're really trying to find those companies and stocks that are going to populate the indexes in the future. We're just trying to find them early. And we give our research away because we think this part of the market is so inefficiently priced. And we want people to understand how provocatively the world is changing, how 5 innovation platforms, so robotics, energy storage, artificial intelligence, blockchain technology, and multi-omic sequencing in the life science space, are going to transform the world completely, because these platforms are converging. We actually use the volatility to our advantage. We are what is called a liquidity provider. So when our stocks get hit hard, or stocks that we're interested in get hit hard, and our research is pointing toward them as primary beneficiaries of the way the world's going to transform, we will buy. And when, on the other hand, the market gets really excited about some of our stocks, we will sell, even though, and what I mean by that, this is just trimming around the edges. I'll give you an example. Tesla is our largest position, and as a firm, and we have, when it got down to 100, 150 in the last couple of years, we were buying aggressively. As it has scaled up to roughly 250, we'll take some profits. Now, why do we do that? We do it because disruptive innovation is controversial. And so we know the stocks are going to be volatile. And over the years, we've been able to add to our performance by trimming when stocks are really scaling at a very rapid rate, and by buying when they are falling. So, buy low, sell high. But we really do that just at the margin. because we are a high conviction manager. So you're not going to see us flipping in and out of stocks. We have right now uh, um, an, a portfolio that has been fairly concentrated. And so our conviction is very high as we wait for lower interest rates and a broadening out of the market to take our highest conviction names higher. What we do is ask our trading team to send alerts when there are big moves one way or the other, and then we will address them, see if the moves are big enough to to make a trade, just a tactical trade. But for the most part, we hold our stocks for the long term using volatility to trade around the margin, as I mentioned.
Having just heard Cathie Wood discuss the disruptive potential of Bitcoin and AI, let's now explore her perspective on how these technologies are converging to create new financial systems. The integration of AI's vast data processing capabilities with Bitcoin's decentralized framework is poised to transform our understanding of the global economy. Now, let's listen as Cathie explains how AI will spearhead this new era of financial innovation and the role Bitcoin will play in it.
I was introduced to the business uh, in college by an economist who became very famous. His name is Art Laffer, famous for the Laffer curve. And he introduced me to a company on the West Coast in Los Angeles called Capital Group. And I walked in the first day to Capital Group, and within the first week, I was put on a team that was exploring. Now, this was way back in the late 70s, actually, while I was still in college. They were exploring in 1977 how Hong Kong was going to change in 1997. That was the changeover, right? The turnover. So that was 20 years, and I marveled. I thought, wow, they're paying me to learn. I'm so excited. And, I've always felt this business that, is a fantastic business because the world is our oyster, and really trying to put the puzzle together, figure out the way it's going to work, is pretty exciting. I feel privileged to have trained there because I believe what we're doing now at ARC with truly active management, research focused on names that are not in the broad-based indexes. A lot of asset management firms don't want to go there. It doesn't feel like safe terrain. But from our point of view, given how rapidly the world is changing, that I think that we're going to be in the safer place a longer run, because we founded the firm to figure out how the world is going to change and to get on the right side of change. I think Elon understands that these technologies are converging. So he is creating huge businesses. So just to give you the example on Tesla, it's the easy one. I gave you the 5 platforms around which we have centered our investing and our research. Tesla is the convergence of 3 of them. Robotics, autonomous vehicles are robots. And I consider my Model 3 and my Model Y to be early stage robots. So autonomous vehicles are robots. They will be electric, and they'll be powered by AI. And we do believe that the autonomous taxi platform opportunity is going to be one of the largest in terms of scaling during the next 5 to 10 years. So we think Tesla will own one of those platforms thanks to Elon's understanding of this convergence. And we think that platform or the platform providers around the world will generate $4 to $5 trillion in revenue from essentially nothing now in the next 5 to 10 years. And it's going to be winner take most. Elon understands that. He understands it in the autonomous vehicle world. He understands it in space. He understands it in large language models in the private sector. So XAI and even X itself, formerly Twitter, is going to be a source of great content for his models, for his large language models, as will the content coming out of Tesla. All of those real world driving miles, that's data that he can push through the large language model. So he'll have more differentiated kinds of data, space, autonomous vehicles, Neuralink, so the genomic or multiomics data, than I think anyone else in the world. So many people think, oh my gosh, he is spreading himself way too thin. Absolutely not. He is masterminding one of the most important strategies, certainly in the AI age, and is going to build, we think, 5 or 6 of the largest and most important companies in the world.